Alright, so today, Thursday, August 8th, my overall balance went up in my Questrade portfolio because mostly of my margin account, my equity, my margin account went back up to 7,000. So yesterday we saw that Weight Watchers is what's causing me the problem because the covered call position that I had at 25 is now completely in the money and it's going to cost me $4.65 or $888 just to close it. So I said that I would most likely buy it back and sell another one, but at a further date. So September 20th, for example, at the same strike price. I tried to do that today, but the best I was able to get was about 65 cents. So 65 times 2. So about $130, but it would decrease my cost basis by 65 cents, basically, probably bringing me down to 25 or even lower than 25. But I put an order at around 90 cents and it didn't get executed. So we'll see what happens tomorrow. I think the closer I get to expiration, August 16, I think the higher the premium I can get, because right now this premium has a bit of time value. But I'm going to try to close it tomorrow because I don't think Weight Watchers is going to drop below 25 in 1 week, especially after going from 20 to 25, then from 25 to 30 in the same week. It should drop a bit because the jump was exaggerated, but I don't think it's going to drop below 25. So I'm going to try to roll the covered call and hope that by September 20th, it slowly drops back to 25. So if you recall, I had the AMD position that I bought, I believe, either Friday or Monday. I had a covered call position at 29. Here, let's look it up. All right, so this position here. So it was on July 31st. So I bought 100 shares of AMD at 30.32, and I immediately sold a covered call position expiring August 16 at a 30 strike, and I collected $1.32. So July 31st was last Wednesday, and I was able to close this trade today. So exactly 1 week. So this is my opening trade where I bought the stock at 30.32, sold the call option at a 30 strike price, collecting $1.32, making my true cost, $29. And then I sold it today for $29.85. As you can see here, I sold 100 shares for $33.86, but I had to buy the call option at 4.01. But even better than that, I didn't have to wait till August 16. I closed the trade early. So basically, I went into this trade with the intention of making 30 divided by 29, with the intention of making 3.4% between July 31st and August 16. So about 2 weeks, 2 full weeks. That was my intention, to make 3.4% in 2 weeks. I was actually able to close the trade out early today. So I didn't even have to wait till the end of this week or even August 16. I was able to close the trade for 29.85 divided by 29. So for 2.9%, I was able to close the trade 1 week early. So this is much better. It's a much better return than 3.4% in 2 weeks. So dollar-wise, because it's just one contract, it represents about $85 profit minus the fees of about $12. So this is a profit of $73 divided by a cost of $2,900. So it's about after commissions, it's about 2.5% in 1 week, which I will take any day. So I don't focus on the dollar amount because I do this often. I do it with several other stocks. I focus on the percentage that I can make per week or per month, as long as I can consistently repeat these small percentages. I mean, over a year, it's going to be a big amount, hopefully. So the hard part with these types of trades, or the cover call trades, is to find opportunities, to find the right stock that hopefully does not go much lower after you buy it. So American Airlines, it's pretty good. It's trading close to what I bought it at. Activision is going to be a profitable trade. It closes tomorrow. So I could have closed it today, but I'd be losing out on $25. So I'll just wait for tomorrow to capture the full profit. So if we look at Activision, so Activision was placed August 5th, so this week. So it was actually placed on Monday. I'm going to close it tomorrow, so exactly 1 week. This 1 week trade, I'll be able to make a return of, let's calculate here. So I bought the stock at 46.36, but I collected $2.70. My max selling price is 45. That's my strike. But my cost is 46.36 minus 270. So my cost is 43.66. My max selling price is 45. So that gives me a return of 3% in 1 week. Because tomorrow I'll be able to close out this whole trade for $45 because Activision is trading above $45. So that's another 3% in 1 week with another transaction or another trade with a 3% in 1 week. Usually I go for 3% per month, but of course with these with the correction that we had, it generates a lot of opportunities. So dollar wise, it's going to be 4,500 minus 43.66 minus about $12 in fees. So it's $122. But percentage wise, it's about 3% in 1 week. Bristol Myers is going up, so hopefully by August 16, I'll have a much decent call premium that I can sell at a 50 strike. My true cost is 50, so I need to stay at a 50 strike. I don't want to do the same mistake as Weight Watchers. Box is pretty low. I could probably buy some more box, but I'll wait till September 20th. I'm not in a hurry to fix this trade. Dell should be a good one. It's slowly coming back up. Goodyear Tires is slowly coming back up. Kraft Heinz, well, it got destroyed today, so this is a bad one. This is a stock that's really hurting me. Macy's should be fine. So this is a part of an iron condor that I left open. I need Netflix to stay above 310 come expiry date of August 16, so by next week. And it looks like it has a good chance of staying above 310. By August 16, right now it's at 314. If it does stay above 310, I keep my profit of the difference of 221 and 154, so about 70 cents or $70. So if it stays above 310 come expiry date, I keep the full $70 that I made when I placed this trade. I've got another iron condor here, but this time I need Netflix to be above 320 come August 16. If that happens, I keep my full profit of about, if you look at the difference here, 360 and 289, so about $70 on this side and about $35. So about $1.15 about, or $1.05. So if Netflix stays above 320 but below 360 come August 16, I keep my full profit of $105. Right now, currently as we stand, I am up $35 on the call side, but I'm down $160 on the put side because it's trading below 320. So I could close it if I want, but I'd be closing it for a combined loss. So if we include maybe this loss with Nvidia's coming back up, Six Flags is coming back up, SNC is slowly coming back up, but the premiums are high. So I've got a SPY vertical put or an iron condor that expires September 20th. I need the SPY to stay above 293, and today I think it is it's at 292. It closed at 292.74, but it has a good chance to be above 293 come September 20th, so I'm not worried about it. I've got another iron condor by September 3rd. Needs to be above 280 but below 305. I think it has a good chance as well. If that happens, I keep my full profit of $35 plus $70 about. So a little bit under $90, a little bit under $1 or $100. And as you can see here, I can close the trade early if I want, and I'll make a profit of 10 plus, I'm looking at the difference here between 106 and 187. So I can close this trade early if I want, if I don't want to wait till September 3rd, and I would make a profit of 10 and 20, so about $30 profit, but $16 would get wasted in commissions. So I'd make a profit of $15. So I'm not going to close it early, I'm going to wait, because I think I have a good chance of keeping the full profit. I've got another SPY iron condor. This one expiring August 28. I need the SPY to stay below 320 but above 292. So this one's closer on the put side, but it still has a good chance because I still have time. I can close out the trade early, but as you can see, I'd be losing money. On the call side, I'm making money, but on the put side, I'm losing money. The difference between, I'll be losing 211, but I'm gaining 132. So I'll be losing money overall on this iron condor if I close it early. But if I wait, the more I wait and it stays between this range, the profitable the trade becomes. I've got another iron condor expiring August 26th this time. I need the SPY to be between 290 and 310. So this one has a very good chance as well. So I could close it early, but I would be losing money. I'm up on the call side, about $35, but I'm down on the put side about $60. So overall, I'd be losing $20. So I cannot close it early. I have to wait. But right now, the SPY is trading in the right direction. It's within the range. The only issue is that because implied volatility was high, because everything dropped hard, so that increases volatility in the market. So the premiums are more expensive, which creates that's why closing out the trade is actually going to cost me money, even if I'm inside the range. But as long as I'm inside the range by expiry date, they're all going to expire worthless, and I'm going to keep the full profit. So for example, this trade, my max profit is the difference here. So 45 minus 11, so about $34 plus 119 minus 79. So that's another $40. So about 40 and 30. So it's about $75 profit that I would keep. And that's in 30 days. All these trades were placed with an expiration of 30 days with a risk of about $500. I've got Tesla, which is doing well because it's within my range. It's trading at 237. I need it to stay below 260, but above 205. So I'm not worried about the put side, but I am a little bit worried about the call side. It's at it needs to stay below 260. I mean, it's not far from 260, especially Tesla can move 10 points or 20 points per day, but there aren't any events that would make it move that much, but you never know. Plus, I still have time. It's still until August 30th. So I've got 3 weeks, which is enough for Tesla to really go above 260. I could close it early, but I'm not really profitable, or I'm slightly profitable. So as you can see on the call side, I'd be losing $10. On the put side, I'd be making $30. So overall, I'd be making $20 if I close it early. So that's $20 profit, but remove the commissions of $16, I'm left with $4. So if I close it early, it's like I didn't do anything. At least I didn't lose money, but I didn't do anything. So in fact, if I'm worried, I could just close it early, but I would like to make my full profit of, I think on this one was $125. So as long as Tesla stays between 260 and 205 come expiry date of August 30th, I keep $125. But if I'm worried, I can close everything early and just make $5, which is not the point. Uber, let's see what happened with Uber. That's great. I think it went up after earnings. Actually, it went back down. So it's at 40 now. But my strike is at 40, expiring August 16. So it looks like it looks like Uber is going to be a profitable trade. I'm going to get my money back. So this trade is about, I think, so Uber was August 2nd, so last week. So it was Friday of last week, actually. So it was Friday of last week. Bought it for 40.09, collected $2.17. My max selling price is 40 because that's the strike I chose, and expiring August 16. So this is exactly a 2-week trade. So if we look at my true cost is 40.09 minus 2.17. So my cost is 37.92. My max profit is 40, or my max selling price is 40. So that's $2.08 divided by my cost of 37.92. So that's 5.4% in 2 weeks. So of course that's amazing. That's 2.7 in 1 week and 142% in a year if I can do this consistently, of course. And it's a dollar amount of about $200 profit. So as you can see, AMD made about $85. Activision will make about, if I remember, 100 something. And then Uber would be $200. So all these small amounts, they add up. But then you have the bad trades where you buy the stock at 30 and then it ends up trading at 19, and then you end up selling a covered call at a lower strike, and then the stock goes above that strike, and now you're kind of in trouble because you're forced to let your stock go at 25, which is below your cost, so you're losing money. But like I said, with Weight Watchers, I'm going to try to keep rolling it over until the stock comes back down. I was actually thinking of making a trade today on the SPY, another iron condor. Actually, let me know what you think. I'm going to show you how I set it up here. So I went for the iron condor with Questrade here. On the SPY, I like using the SPY because it represents the whole market. So it's the thing that's probably going to move the least. It's going to have the least fluctuation or crazy fluctuation. But a stock can move really hard in one direction from in one day. So I find the SPY is easier to handle because it's less stressful. But of course, the premiums will be lower. So I was going 43 days out. I was thinking of doing an iron condor on the SPY. I was going to choose the upper end. I was going to choose 308. I was going to go 5 point wide. So 308 plus 5 is 313. And then on the lower side, I was going to choose, I think, 277 and 5 point wide. So 272. All right. So this would allow me to collect, as you could see here, about, let's say, $93. Okay. The reasons why I would choose these strikes is because of the probabilities. 277, there's a 10% chance that the stock trades below 277 come expiry date of September 20th. And then there's a 14% chance that the stock trades above 308 come expiry date. So looking at that, the probabilities seem good. I mean, I don't think it's going to come back down. I don't think it's going to go below 280. So that's why I feel comfortable at 277. It's safe. I am a little bit worried on the call side. I think the SPY is going to go over 300, maybe 302. I don't know how much time it's going to take for it, but I think it's going to, if I'm if any side is going to get tested, it's going to be the upper limit, upper boundary. But I would collect $93 on this trade, risking the difference between $500 and $93. So risking $407. $407 would be my max loss. But the issue with this trade is this is a probability game. It's a matter of placing a lot of these trades as long as the probabilities are right. The more you place the trades, the more you let the probabilities play out. So if we let the probabilities play out on this trade, so I have a 14% chance on losing on the call side and a 10% chance on losing on the put side. So combined, I have a 24% chance of winning. So that would mean I would have the difference of 76% chance of winning. So probability wise, I would have a 76% chance of making my $93. So, but I also have a 24% chance of losing $407. So you see, the more I make these trades, the more the probabilities play out. And if the probabilities play out, I'm actually going to be losing money with these types of trades because a 24% chance of losing $407 is $97, but a 76% chance of making $93 is only $70. So I'd be losing money in the long run if I keep placing these trades with this probabilities. So the pricing of this trade is not right. I need to collect a higher credit for this to make sense. But at the same time, the whole idea behind iron condors is you need to close them early. So I could place this trade and then 20 days into the trade or 25 days into the trade, I could start being profitable. And then this $93 that I collected, I could close it for $50 or $45 less. So I'll close it before the expiration in 43 days. So I'll make my profit and then I can open and then I can place another iron condor with a different range depending on where the SPY is trading at. Because every day goes by, the premiums lose value, especially if the stock is not moving. Or I could leave it till expiration and really just hope that the stock stays below the ranges. But if the more you place the trades, if the probabilities play out, in the long run, you'd be losing money because of the calculation I just made. So I like the idea of iron condors because I don't have to guess the direction of the stock. I just have to pick a range, which is, for me, it makes a lot of sense where you just have to pick a range. It's a trade that you can make consistently. Just pick a range as long as the stock does whatever it wants, goes up a bit, goes down a bit, moves sideways. I don't care. As long as it stays within that range, I make my profit. So for me, the concept of the trade makes a lot of sense. But for some reason, I keep losing money with it. The stock always goes outside of the range that I pick, or I end up managing it too early. So I'm still trying to learn it. I would like to be good at it just because to me it makes sense. But if I keep losing money, I'm going to have to just forget about it and just stick to covered calls 100%. But like I said, what I like about it is that you don't have to worry if the stock goes down or goes up as long as it stays within a certain range. Another trade I could do with the SPY is I could remove the call side. If I'm worried about the call side and I'm confident that, okay, the market just crashed a bit, it's not going to crash again. It's going to continue on its way up. So I could just do this trade on the put side. So I could pick, if I'm confident that the stock won't go below 277 come expiry date, then I could just do the put side. I'd collect about $60 and I would just wait till expiry date because I'm confident that it's not going to be going that direction. If it does, it's not going to go below 280. But this is me making an assumption. So I don't necessarily want to be making that assumption because I know eventually I'm going to be wrong. I'm not going to be making right assumptions all the time. So I'd rather have a neutral strategy, not knowing what the direction is, giving a range, letting the stock move like it wants, but as long as it stays within that wide range, then I keep my profit. In fact, let's see what happens if I go even wider. So I had a probability of 10%. Let's see if I do a probability of 5%. So let's do 272 on the downside, on the put side, and then on the call side, let me just pick the right expiry date, so September 20th. On the call side, maybe do 310. Let's see what probability that gives me. It gives me 11. So looks like I have to go even further. Let's do 315. Okay, it gives me 5%. So I'm selling this one and then I'm buying the 320 for protection to limit my loss. All right, so it's about 5% on each side. So this one, the probabilities are higher, but as you can see, the premiums are much lower. And this one is actually better priced because this one I have a 10% chance of losing. So 10% chance of losing $450, which is $45. but I have a 90% chance of making $50, which is $45. So this one actually breaks even. The more I place these type of trades, the more I break even. But look, if you look on the call side, I'm only collecting $6. So is it really worth the risk on the call side for just $6? On the put side, I'd be collecting 180 minus 133. But on the puts, on the call side, I'm collecting only $6. So this trade is really not worth it in terms of the call side, because I'd be risking $450 just to make $5 or $6. So not worth it. So yeah, this is a trade I thought of making, and I placed it. It didn't get executed. But that was my thought process. Let me know what you think. Let me know also if you have like a way to make iron condors work, because I'm tired of losing money with iron condors. I mean, the ones I have here, like Tesla, I mean, right now it's in the range, but I still have until August 30th, so I don't know what's going to happen. I'm pretty confident for the rest of my iron condors for the SPYs. They should be fine, as long as we don't have like another crazy correction or crash. And Netflix, I'm a little bit worried about Netflix for the 320. It was trading above 320 last week before this correction. So hopefully when this correction goes away, the stock rebounds back above 320, and then I'll be fine. But this stress that I'm having is not something I like. So that's another reason why I'm thinking of dropping iron condors and not using them anymore, or at least find a way to manage them better. Zillow dropped 15% today. I'm definitely watching it because I made a good trade with Zillow when it was trading at around 34. So I would like to get into Zillow again, but hopefully it drops below 40. I want to get into Zillow again because the premiums are high. And I mean, the stock was trading at 51 and it dropped to 42 now. So it's definitely something I'm watching. And today, Camping World dropped hard as well. So if you watched the show called The Prophet on CNBC, with Marcus Lemonis, I think. Yeah, I think it's Lemonis. So this is his company. He's the CEO of this company, and this guy is an amazing entrepreneur, businessman. But for some reason, his company's not doing well. Revenues are going up year after year, but profits are not going up. And the stock dropped 15% today after earnings. But it does have decent premium, so I was thinking of buying the stock, because if it dropped 15%, I mean, it's not going to drop more than that. It took enough of a beating. That's my assumption that I'm making, so I'd be willing to buy this stock and then sell a call option at a $9 strike. I actually placed the trade today, but it didn't get executed. But yeah, this is a stock I'm looking to buy just because I like Marcus, and I don't think the stock deserves to drop this much. I mean, revenues are going up, so that's always a good sign. That means you're doing something right. But profits are not going up. So it's just a matter of fixing the internal process, controlling your expenses. But being able to capture more clients is always the hard part, and they're able to do that. So as long as you're able to capture more clients, that's a good sign. But not being as profitable as you want to is something you can fix easily. So not too worried. So I'm going to try to buy this stock if the price is right. So yeah, that's a quick overview of my portfolio today. I'm glad that it's back up compared to yesterday. So if you have any questions, leave them in the comment section below. Any suggestions as well, leave them in the comment section below. If you can open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get up to $250 back. And also check out the other referral links below. Thanks for watching.